let's call it the IRRRL, which is interest rate reduction loan. So when you're talking about the different loan types for VA financing, you have your primary purchase, right? We're purchasing a home. That's the primary mortgage that a lot of consumers have. And then there are different, what are called streamlined type of refinances if you're staying in the same loan program. So let's say I purchased a home 2 years ago, my interest rate 7.5%, 8%. Rates have dropped and low sixes, high fives. I've not looked at them for a while, so don't quote me on that rate. However, if I say all I want to do is take advantage of the lower interest rate, the VA is looking at you've made your payments on time, right? Credit score's good. And actually, we do non-credit qualifying on the IRRRL. So as long as you've made your payments on time, that's all you need. And you're still employed in the same position if you're active duty, great. They really just want consumers to take advantage of the lower interest rate that as long as they have been making their payments on time. And there's some guidelines around that, don't get me wrong, but in a nutshell, that's what the IRRRL is. It's a VA to VA refinance with only reducing your interest rate. So you're not taking any equity out. You're just trying to take advantage of the lower interest rate. And so it's faster, it's a lot lower cost. You don't have to have a new appraisal. You don't have to go through that whole mortgage process again, because a lot of times a refinance, you supply the same documentation and you go through the same process on a refinance a lot of times as you do a purchase. But this streamlined interest rate reduction refinance loan that VA offers simplifies all of that.